All right, welcome back. Well, I want to continue where I left off here. First off, I do want to say that we want to keep these as short and actionable, broken down into the areas that you're most focused on to get you in and out in 5 minutes or less to get the information that we want to give you and that you want. So let's just quickly finish off what we were looking at. In the ETF screener that we have here under the tools area and ETF screener, you can see here that you can quickly search for any ticker symbol. Let's say you want to search for the Russell. You can just simply click RUSSE and you'll get some information. Maybe it's the Russell Nomura small cap Japanese. Lots of different things you can do. But for our purposes that we want to focus on right now, remember what we were looking for were short-term bonds that will be most impacted by a potential Fed rate cut or rate increase announcement. Let's keep in mind here that they've said a lot of things that say what? Well, we're not going to raise rates anytime soon. Not unless we see something, some incredibly good news on the growth side of things. But the bottom line is that we've been at zero for far too long. They can't go lower, so they can go higher. Even if they just raise it by 25 basis points, that's a 250% gain in the Fed rate. So just a small amount is going to make a huge change in these bonds. I would be looking for things, like I said, short-term bond here, down at the bottom. Vanguard, short-term bond ETF. iShares 1 to 3. That's one that I'd be looking at myself. You can see here that you'll have the information come up. This is CSJ. Let's take a look at SHY, the one that I really like for this week. SHY. There's also a couple of ultra short. And you can see there SHY, type in iShares Barclay 1 to 3 year Treasury bond. There's a couple of ultra short out there, like TBT is really the 20-year ultra short. But 20 years, like I said, going to move a lot. Certainly could, but your shorter term, like 1 to 3s, are going to move a whole lot more. You can see all the information that we get here. We get a little mini chart. We get some information. We can look for 30-day market health. We can look for risk-adjusted return. Tons of information here in the ETF screener from our friends over at Macro Axis. Now, let's really get down and serious. What happened last week in the international or global market? What led and what didn't? Let's go over here to our little heat map, and we know that the brighter green it is, the stronger it was, right? Well, look, once again, I've been somewhat bearish on China for good reason, as we'll see in just a second. But China didn't lead anything. Hong Kong didn't. Let's see, Japan most certainly didn't. Up only 2%. I mean, come on. These are up big, but come on. These are the emerging markets that we want to see up at least as much as IWM right here. Remember, IWM would be considered less risky than an emerging markets like China in many people's perception. So you can see this emerging markets was up 5%. These things have been underperforming for the last at least 2 months. And, we've really seen the domestic U.S. indices perform much better. One big winner, though, I want everyone to notice was RSX, Market Vectors Russia ETF. This is one that I've been seeing that is making a notable turn in trend, one that's meaningful. More meaningful than the simple change in trend on China, which I don't see very much short-term reliability in is the best thing. Now, another thing that I consider global are commodities because they're directly related with the global supply and demand. Take a look at GLD down here. Didn't do very much. I think that's very important to note. It is coming back, and you'll hear a lot of people talking about it, but the bottom line is that it really isn't as strong as silver is. And I think that's important to note for everyone. Let's go back to our real-time charts and take a look at China. I think that's one of the most important ones to take a look at. In large part, it does end up leading a lot of what we see in the emerging markets. Take, for example, here. First off, what's your most basic emerging markets ETF? EEM. Let's take a look at that on the weekly. Weekly is going to give us a much better view of what's going on. Weekly here, starting to come back above on a couple things. I happen to know that one of the major things I look at in elements is still telling me to stay away from emerging markets. Period. I look forward to seeing you tomorrow.